Hello, I'm Scott Bruce from Integrity Wealth Consulting with our August 2017 Economic Update. In this video, we'll talk about some of the headlines that influenced markets in July and give you some insight into what they could mean for you. Please stay tuned at the end for our required disclosure statement. After a lackluster start to 2017, the U.S. economy quickened this spring, powered by strong consumer spending, which was helped by a steady labor market. The Commerce Department has said growth in the gross domestic product, or GDP, the economy's total output of goods and services, expanded at a 2.6% annual rate in the April through June quarter. That's more than double the revised 1.2% pace in the first quarter. A slow first quarter followed by a stronger growth in the spring has been a familiar pattern over the past several years. Because of it, the government began combined efforts to manage shortcomings in the government's seasonal adjustment process. Even with this spring rally, analysts do not think it will meet the ambitious targets set by President Trump, who pledged to boost growth to rates of 4% or better. For 2017, experts believe growth will come in around 2.2%, which is where growth has been since around mid-2009. Much of the April through June strength came from consumer spending, which accounts for 70% of economic activity. Spending grew at 2.8%, up from 1.9% in the first quarter. The economy also benefited from modest inventory reductions that hindered first quarter growth. In other key categories, business investment in plants and equipment grew by 5.2%. However, housing construction fell by 6.8%. This comes after a surge during the winter because of warmer than normal weather. A national homebuilder organization has said that land and labor shortages are limiting the pace of construction, even as the nation faces a shortage of affordable housing. Economists predict that housing will resume growth in the coming quarter. Internationally, the U.S. dollar was weaker at the end of July. U.S. stock futures were pulling back, and European markets were in negative territory. But the Dow Jones Industrial Average, S&P 500, and NASDAQ all hit record high at month's end. Technology stocks took a pounding because of now familiar speculations about overvaluation. A decline in healthcare and industrials also had negative consequences for the S&P 500. Gains in telecoms, energy, and the consumer stocks did not offset these losses. Even so, these sectors felt broad-based gains after the Fed refrained from raising rates. That's it for our August Educational Economic Update. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us our office a call at 724-940-9060. We'd be happy to talk.